All right. Hello, everyone. Good morning. So, as you see, I'm doing it solo today, which is going to be interesting. We'll find out. All right. So, as you can see here, I'm starting off. I'm going to go back and forth between TC 2000 and Option Stalker. But let's start here at TC 2000 and let's take a look at the market because that's where we all start. I have your questions already. I'll answer those. I'll go off on a rant or two. We'll see. So let's start with the market here. You can see SPY, and what you have this here on 611, you have a gap up on SPY, right? When I say the market, I mean SPY. SPY is representative of the top 500. It's obviously a weighted index, but SPY is very good. It's the best indication you're going to get. It's better than NASDAQ. It's better than the small cap. It's the best indication you're going to get as to the overall health and direction of the market. Also, 75% of all stocks follow SPY. When they don't, it's relative strength and weakness, and you should know about that by now. So you see this gap up here, and what that has done is created a bit of support for the market. So you can almost even just draw a line here like this, and you can see the line here, move that down just a little bit there, right around there, kind of tipping right to there, and starting right here. You can see it bouncing off, right? Bounced off there, bounced off there, bounced off there. That line comes in right around, where is that? It comes in roughly at 543. So $2 away from it. So you do have some support in the market. Now, if the market fell below and fell below into this gap, so below 540, then you're going to start looking at a little bit of a drop here and maybe even a test of the 15 EMA and then possibly eventually a test here. And that would be a real drop. And remember, market hasn't had a 2% retracement in like one of the longest stretches in a while. So several years, I think. I'm not several years, about a year since it retraced 2%. Brethren said, "Don't go off the rails." Trust me, you want. I think more people want me to go off the rails than not, but we'll see how it goes. All right, these are some stocks that I'm watching here, and with the market today, one of the reasons I put out a post the other day saying the market is in a dangerous spot. First, look at this volume. Look at this. Out of the last 1, 2, 3, 4, 5, 6, 9, 12, 15, 17 trading days, you have only 3 days where the market was above average volume, right? So you have this sort of melt up, this float up here on just pure inertia. You're in this news vacuum at this time. You're getting very small candles. So you can look at the ATR of the market, the average true range of where the market oscillates back and forth. And it used to be all the way up here at around 7, and you can see commensurate with that the larger candles. See how small they are here because it's now 4.04. So you're getting this smaller range on the market, low volume, and as we all know, and it's been reiterated 1,000 times, it is extremely top heavy. So now you have this market here that is driven by 5 or 6 stocks, right? And one of those stocks today, Nvidia, is actually down. It's down $1.90. And SMCI down 21. So you have, your staples. You have Apple up $5 today. Apple's been on fire. Amazon, my pick from last week, on fire. But if you look at an unweighted balanced S&P, it's been dropping, right? So it's driven by these top stocks. So that puts you in a situation where any news drop, any type of negative news that comes out, whether it's economic or socio-political, global, could have a huge effect on the market with this low volume, because what you get is a buyer's boycott. When you have a reason to sell but not a reason to buy, you don't get that balance, you get a drop. And with this low volume, you don't have enough buyers in there right now counteracting it. And why would you buy at this point? You're close to an all-time high. You have these overextended stocks. There's really no reason to jump in to the market. And that's where you're seeing this low volume, is everyone just kind of waiting for something to happen. And Micron earnings tonight is probably not going to be the catalyst for, a directional move. It'll affect the market. It's the last major earnings, but it's not going to have this huge move. Also, you have the market today kind of flat after FDX posts incredible earnings, when usually that moves the market because it's one of the last earnings to report. All right. So last week I said Amazon, and I said Amazon last week, and it was here, right here, and it's now here. So you can see how that trade worked out. Amazon, perfect, right? If you did a bullish put spread, it worked. If you did calls, it worked. No matter what you did on Amazon, as long as you held it and you did not freak out on Monday, that is the important thing. You did not go, oh shit, Monday, oh my God, it dropped, I got to get out. In fact, I got all these comments on Twitter about, oh, looks like people love to say, oh, looks like this trade didn't work for you. Fuck off. Yeah, it worked just fine, right? Look at this bounce back up today. Why? Because it's clear Amazon was going to come back and retest its all-time high, which is exactly what it's doing. If it breaks through, so you see Amazon hit 192 here, and the all-time high being 191.70, you see it break that, Amazon's going to go to 200. It's not a bad long. I would still probably call it. Pete, who is out today, as you can see, the rational voice is not here. He called for a short of MU last Thursday, and that would have been here. And when he called it, it was right around 147, and now it's 141. It's reporting tonight, so you should get out, obviously, if you took, take your profit if you took it. So once again, if you took either trade that was suggested on this stream, you would have done fine. I think we're like, I don't know, 49 out of 50 now. So, just use the trades here. But understand why. Understand why we're giving you these trades. Understand what the thinking behind them is. All right. Now I am going to switch over here to Option Stalker for a second, and you will see why. And it's going to be to answer the first question that I have here that I want to answer. Okay, so there is a question here about, would you do a MU time spread on earnings? So the idea behind time spreads are this. If you have a huge IV differential between this week and next week, right? So let's say the IV for MU right now for this week, take a look at it, is 210%, huge, right? And now next week, July 5th, that is 110%, right? So you have 100% differential in IV. That means after earnings, when IV crushes, when IV drops, so all of the unpredictability, the volatility right now is basically saying, hey, we have earnings, it's unpredictable, can go either way. And after earnings, that variability dissipates. So you have this IV crush. What's going to happen is the IV is going to be dropping much faster and much more significantly this week than next week. So that 210% will drop down to, let's say, 60%. And next week's 110% will drop to somewhere around, 20, 30%. That means the option prices for this week are going to get that much more decreased than next week's. How do you benefit from that? Well, if the stock has a historical likelihood of not exceeding earnings expectations. And how do we know that? Look right here. I go to market view, I go to pre-earn options, MU, and I look the number of times in the last, I think, 4 quarters or so that this thing has exceeded expectations is 0%. It hasn't. It stayed within its parameters. If it stays within the parameters, so right now those parameters are calling for a $18 move, right? $18 move in MU. That's huge, right? That's a probably 13% move in the stock. That's a pretty big move being projected. So as long as it stays within $18, plus or minus, doesn't matter. It can go up 18 and go down 18, anywhere in between. That IV crush is going to benefit you. Now, if it goes up 30, well, the trade doesn't work. If it goes down 30, trade doesn't work. But as long as it goes up or down within 18, trade works fine. So how do you do the trade? Well, you would sell the at the money calls for this week. So you sell the 940 calls, let's say, the 141 calls, and then you buy next week's at the money. And that right now would cost you, if you sold the 141 calls for this week, bought the 141 calls for next week, that would cost you around 75 cents to 80 cents. And tomorrow, right after earnings, the idea would be is you put an order in to sell that for, let's say, $1.20, make 50% profit on it. And if, as long as it stays within the $18 range, you're going to do well on that trade, right? You might not make 50%, you might make 40% profit. But as long as it stays within the range, you'll be profitable. And the interesting thing here is that normally on options, when you're trading options, you're betting that the market makers are wrong. That's essentially what you're doing. You're betting against the market makers. The market makers have priced it out and said, okay, this is how much you're going to overpay to get your leverage, right? And when you do that, and you're saying the market maker is going to be wrong, you're basically saying that this stock's going to move an outside move more than what market makers think it's going to happen. In the earnings trade, which is the trade that takes advantage of the IV crush, you're actually betting market makers are right. And so you look back and you say, how often have market makers been right on this stock? And in MU, they've been right almost every single time. It does not exceed its expectations. So that is the theory behind it. Given that, I think MU is a pretty good trade for that earnings time spread. Okay, so now I have some questions here, and I get this occasionally, this type of question on fig leaves. So what is a fig leaf? All right, a fig leaf is a synthetic way to own a large position in a stock. Essentially, what you're doing is you are going to buy some deep in the money calls. So let's say you wanted to do a fig leaf on Amazon, right? Probably not the best one because it doesn't, you want something that's going to have good premium. So let's say it's Nvidia. Let's say you want to do a fig leaf on Nvidia. It's probably the most popular stock that people do it on anyway. What you do is you're going to do a leap. You're going to do a leap call or something close to it. And so you're going to go, let's say, to June 25th, 2025, June 20th, 2025. You're going to buy the 0.8 delta calls on that, which are going to be expensive for Nvidia. They're 97 calls, and you buy those for $41, $42, right? And so let's say you buy one of them, right? It's that's a $4,000 option right there. So, or you buy 10 of them, you spend 40,000, whatever it is, if you're investing. And then every week you're going to sell calls against it. You're going to sell the 0.1 delta, let's see, next. So if you started it and you did next week's calls here and you were going to sell the 0.1 deltas, you're going to get 55 cents for that. So the idea being you do that every single week, right? And you sell the calls against your long calls. That way, if you ever get called away, you exercise your in the money calls and you're fine. So you have your in the money calls growing every single week or going up with the stock. But as long as it doesn't go parabolic, it doesn't get called away. And you're collecting premium. So you're collecting premium as your call gets more and more profitable. That's the idea behind a fig leaf. You want to do it with stocks that you feel are going to have it's that combination of stocks that have a steady rise, but good premium. And the reason stocks have good premium is because they're unpredictable. So it is a fine line. That's why Nvidia is such a popular choice, because the consensus of most people is, okay, Nvidia will be at 200 by the end of the year, right? It might dip, it might go back and forth, but by the end of the year, the stock's going to be at 200. Same consensus on Amazon, less room to 200, but you're not getting the premium. So a stock like Nvidia, yeah, you can do a fig leaf on. You get the 0.8 delta calls, leap calls for a year from now, and then you sell the 0.1 calls. You can even get a little risky, sell the 0.15 calls delta every week against it, and then you're fine, right? let's see here. What else do we have? What was your best trading year? Last year, over 100% return. This year's not over yet. Just started. Well, halfway through. I wrote an article, as someone said here, about how I adjusted to trading in the 2022 bear market. And I found 3 supplemental methods to help close that 15 to 20% profit gap. Earnings trades, counter trend trades, rule subversion. Yeah. Well, that's really goes into Wiki 2.0. And the problem is, and this is the problem here with trading in general, right? How do I put this? So you get a lot of people who are, let me see here. Okay. You get a lot of people that are learning how to trade, and we all gone over all the issues that people have when they learn how to trade. They expect a really fast return. They think it's easy. They're going to get this. It's kind of like someone who starts playing poker just because they watched it on TV, and then they go and they get their ass kicked up and down on the poker table because they really don't know how to play. Just because you know the rules doesn't mean you know how to play, right? And they think they know how to trade. So what we do is, okay, here are some basic things to follow, right? Some general rules. Market like today, just don't trade. Just don't fucking trade. Just stop. Just take a step back, study charts, set alerts, look at it. The market is at it's up 29 cents, barely moving with low volume. Why do you want to trade that? Right? What is there that you could trade that? Even the stocks that look good right now, you're not getting any market tailwind. You're not getting any help behind it. If you short something right now, the market's not giving you any help on that short. And if you're going long, it's certainly not giving you any help there, right? So why not wait for a day the market's going to give you help? So a day like today, just hold off until you see a direction. If the market is up, don't short shit. If the market is down, don't go long, right? Now, these are rules that I'm not going to follow. The rules Pete's not going to follow. The rules most professional traders aren't going to follow, but the rules you should follow if you're just starting out, because you want to get a feel for it, and your odds of fucking up if you do try to get a little bit fancy and, oh, I'm going to short this stock because I'm anticipating it's at an all-time high and all. That's where you get into this weird mindset of predicting and trying to time the market, right? So you brought up, these kind of other strategies to use, like in a bear market. Yeah, in a bear market, when I said counter trend trades, what I'm meaning there is there are some clear stocks that are performing well in a bear market, right? Whether it's because of the socioeconomic conditions that are causing the bear market, and those industries or sectors just happen to be the ones that people are gravitating towards, or whether it's because of you have these occasional days that you have a strong market day in the middle of a bear market and you see a stock responding to it. That would be kind of counter trading. Going long there is kind of counter trend trading there. Earnings trade, most people doing an earnings trade are going on their gut. They're going off something they read, or their idea, or Amazon looks like it did well. Everybody I know shop there. Amazon's going to have good earnings. If you look at the reports, though, coming out of institutions, and that's what I do, is try to get a feel of, do institutions have a very strong sense behind an earnings trade, right? And occasionally they do. Sometimes they don't. For example, JPM right now, they are bullish on the earnings, but they're also cautious. They think that it's a very crowded stock. It's gone up 50% lately, and they're not recommending a trade on it. So that tells me that, okay, gun to head, if I had to trade it, probably would trade it bullish. But unless they're like gung ho, like, yeah, it would take a miracle for this thing to drop, and I've seen that occasionally, that's not a good earnings trade to make. So it really is about being creative, but you can't be creative if you don't know how to trade. And how do you know that you finally know how to trade? It's really very simple. Are you making money? It's as simple as that, right? If you are not consistently making a profit, if you are not consistently taking money out of your account. And that is the point of it, right? You have to treat it like a business. Every month, are you taking money out of your account? And is it consistent? You do not want a huge standard deviation there. You do not want a huge swing there. You want consistent results. Is that happening? And if it's not happening and you're not ready to expand beyond very basic beginning learning how to trade. See here. What else do we have? D-Ball's giving his wife a large chunk of money and teaching her how to invest. Good luck with the fig leaves. All right. A question on the balance between confirmation and rushing. I've been watching Amazon, took a small position at the 1210 candle, followed by the all-time high breach. It is now reversed. I mean, what is your time frame here, right? Amazon's above, if it's intraday, Amazon's above VWAP. It's right by the all-time high. It's probably going to take a couple of times to poke through that. Again, you have no market backdrop. That's why I took profit in Amazon, because if I had a market backdrop and I saw the market was up a lot today, I would have let Amazon run. Simple as that. But I don't have it, right? So if you're in profit in Amazon, probably good to take profit and wait for it to break that all-time high and confirm. Desktop metal trade, just unusual option activity. Sometimes it's wrong, sometimes it's right. It's usually a cheap trade and worth it. I get that announcement on Trade Exchange. Let's see. What are my thoughts on Marvel? What are my thoughts on Marvel? Let's take a look at Marvel, shall we? Let's take a quick look at Marvel. And I know I have a bunch of questions here that are lining up. So let's take a quick look at Marvel, which I will do. All right. Marvel, looking at it together for the first time. Typing in Marvel, looking at it. Jesus Christ, this thing looks terrible. Why the fuck would you want to do anything with Marvel right here? So look at this. First, you have three SMAs here. You have the 100, you have the 50, you have the 200. It is in no man's land. It is between them all. So you have no direction, right? Now let's see. You can maybe say, all right, where's the support? Well, look, there it was. It broke through, broke below it. So it's bearish down, but it's not that bearish. It's down 66% today. So where's the volume? Non-existent volume on this thing. So you have non-existent volume. It's in no man's land. It's slightly bearish. I certainly wouldn't take it long here, maybe for short-term short, but do you have the market? No, the market's up, not up, but it's flat today. So you don't even have the market giving you a tailwind on this thing. So I would avoid Marvel right now on any type of day trade like the plague. There's no point to it. All right. Okay. That's good. Discussion and chart will be the same during the talk, so I can follow the consciousness. Okay. All right. Newbie question, but what is the rationale behind the consensus that Nvidia will be approaching the 200 for its stock price? I don't know where that is. That a consensus there? Someone say that. Let's take a look. Nvidia, it's not going to approach the 200. No fucking way. I mean, look at this. The 200 SMA is down. Oh, you're talking about 200 stock price. Got it. Yes. That is just, I thought you meant the 200 SMA. I'm like, you're out of your damn mind. There's no way Nvidia is going to 70. If you look at the average price point, first off, so when I say 200, you're looking at long-term, right? End of the year, into the summer. Where's Nvidia going to be? If you're doing a fig leaf, that's what you want to look at. You want to look at not where the stock is now, but where do we think the stock is going to go? And all of this, right? When you're doing fig leaves, when you're doing any long-term play, unless you're doing a long-term 401k type shit, investing, whatever, then no. But when you're doing like a play that's within a year, all of it's market dependent, right? If the market friggin' crashes tomorrow or whenever, all bets are off, right? Nvidia is going to drop below 100 if the market goes down below 500. So, you know, all else being equal, you have an average price point in Nvidia approaching 200. Nvidia tends historically to go towards its price point, and that price point gets raised. You have right after the split, Nvidia has defied gravity. Normally, after a split, most stocks drop 5 to 10% on average in the first 6 months. Nvidia did not do that. Nvidia continued upward. So, Nvidia is one of the more actively traded, not only retail, but institution stocks. It's strong fundamentally. It's, everything is in line with Nvidia, including the fact that it seems to be announcing a new breakthrough every other day, that putting a 200 price point by the end of the year, if you're thinking of doing something like a fig leaf, not out of the question. Any fig leaf you do is going to be based on a rationale that it's not a short term, it's longer term. So remember, by the way, that the longer term your position, the less you're depending on technicals. So if you are saying, I want to trade Nvidia today, right? Well, maybe I should short it. Well, now you're looking at an intraday. Here, there's VWAP. Nvidia is below VWAP. You basically say, all right, VWAP right now is at 125.22. Yes, that's where your mental stop is going to be. You don't want it to break that. If you're short, you short the stock here. And if it approaches and breaks VWAP, you get out, take the loss. If it doesn't, you take the gain. There's your intraday trade. Let's say you're doing, some sort of swing trade, and you're looking at, Amazon, and you want to do a swing trade on Amazon. Well, you put your this here, see that? That's resistance right there. And you see Amazon hitting that resistance at 192.16. So there is where you're looking for it to break through. So if you go long Amazon here, you put an alert there. If it can't break through there, then you get out. If it can, you hold on and you ride it maybe a day or two, watching the market all times. Amazon's relatively strong. It just has to break through that line. It looks like it's coming close. 192.16 is where that line is. And so there it goes. It just broke through that resistance point. So this is maybe where you go long. You don't have confirmation on it yet, but this might be the spot where you go long on Amazon. And you're now still looking at technicals. But let's say you want to do a fig leaf on Amazon. Now you're looking less at the technicals. Sure, you want to be concerned with the all-time high, but instead you're looking more at the fundamentals on Amazon. And you're looking at the PE ratio, and you're looking at what the analysts say, and you're looking at, institutional long-term positions on it and hedge funds positions on it. That's a longer-term trade, and the longer term your trade, the less you're going to rely on technicals, the more you're going to rely on fundamentals. Fundamentals are not going to move a stock on a intraday basis, usually, unless there's some sort of big press release that comes out. I'm going to see here. Nvidia just had an announcement. Next wave of AI is set to automate 50 trillion heavy industries. Nvidia forward-looking statements. So Nvidia right now is having a sort of a stockholders meeting, and it's still down for the day. It's coming back up, but it'll be interesting to see exactly what the overall response to that meeting is going to be. So there is going to be constant news events coming out of this Nvidia. Someone said CVNA. Well, first, before I go to that, before I go to your CVNA question, let's go back to Option Stalker for a second. And let's take a look here at our scans, right? Now, you get custom searches on Option Stalker, which are great, but you also have all these built-in scans. So relative strength, which stocks have relative strength today? You can see Amazon right here, right? You can see CAD, you can see ANET, FDX, obviously coming off of earnings. You have all these. If you want to go to Green Royal Flush, you can see which ones are really kind of, over the past couple of days, which are the strongest stocks compared to the market. And Microsoft, Netflix, Apple, Roblox, MU has earnings tonight, so be careful there. You have Walmart's, you have all of these stocks that you can check out. If you're looking now because the market's kind of flat, if there are any good shorts, you just click on bearish here and look at these shorts. Lulu, Affirm, DLTR, relative weak ones. Spot, look at Spot today, down $4.14 on the day. GS, Goldman down, Dell down. So you have, not surprised, Dell down with SMCI down. You usually go hand in hand. You can look and see, which ones are ice cold, which ones are on heavy sell for the day. Moderna had news that their RSV vaccine isn't as effective as they hoped. Effective, but not as effective as they hoped. So that obviously dropped that stock. So using and utilizing scans, and you can build scans into TC2000 or even into Thinkorswim, or whatever you're going to use. But the built-in scans on Option Stalker, I find, are some of the best around, if not the best around. So I use them. Okay, now back to where we were. Wow, there is a equally, if you're considering an exit on a quick 10-minute trade, I often get shaken out by a candle in the wrong direction. I imagine my profit long-term would be greater if I let the candle complete. Yes, Bodega, you would. I recommend doing a walkaway analysis. I came up with the idea of a walkaway analysis, basically with the notion that traders tend to take profit too early. I do it, and non-professional all traders do it, right? You take profit too early. Now, there's never going to be the perfect time to take profit, never. But what a walkaway analysis does is say, all right, here are my, let's say, 10 positions that I had. What would have happened if I waited 5 minutes, right, before? If I just waited 5 minutes on the exits for all of these, what would have been my profit difference? What if I waited to the end of the day? What if I waited 2 days? What if I waited a week, right? And then you look and you see what was the optimal time. So you might find, on average, if I waited 2 more hours or whatever the time frames you set, I would have maximized my profit. So I'm getting out of my trades. Usually I'm jumping the gun by about 2 to 3 hours. You might find I'm jumping the gun by 2 to 3 days, right? Or maybe sometimes by 5 minutes, meaning you're just overreacting to the bar. A walkaway analysis will show you the best way, where that, exactly where that time frame error is, and help you focus and lens in on that. So I recommend using it. All right. Okay. Oh, that thought on Marvell, that person has a PCS put credit spread of 67.69 on that. Put credit spread of 67.69. Let me see, what the hell do you have? Okay, Marvell 67.69. I don't know when that expiring this week. You're fine. You should be fine. 67.77. You're right in between the two, but I mean, no, actually, no, you're not fine. Sorry. you need this to come up. If you can get out for break even right now, I would. Okay. What is the best way to learn from me? Read the shit that I wrote. You can follow me and all that, but I wrote a 300-page document on the Real Day Trading sub called the Wiki. And if you follow it, you follow the steps there, you will do well. I mean, until you complete those 10 steps, it's almost, it doesn't matter what I tell you. You got to complete those 10 steps. I haven't seen a single trader in 4 or 5 years now that has managed to be consistently profitable that I've known that hasn't gone through those steps and hit those benchmarks first. So, all right. I like Google put bullish put spread 170, 165, July 26th, and seem to show any signs of weakness. However, earnings are on the 23rd. So no, don't. The idea behind a bullish put spread is you're letting time decay give you the profit there. And if you do a bullish put spread and hold it over earnings, not only You might say, well, I'll get out before earnings, but because of earnings, the IV is going to keep the price of the option high enough that theta is going to be contradicted by the volatility. So you won't get the benefit of the time decay because the IV is going to prop up those prices. So no matter what Google looks like, you don't do it over earnings. All right, let's see. I'm going back and forth to the different YouTube channels here to see what are the different questions I have. And I seem to have a lot of them. There's like, all right, so there's like 20 questions out here. All right, CVNA by Danny Pooh. Okay, Danny Pooh. Let's see what the hell you think of CVNA. CVNA. Okay. Don't touch it. There's nothing to do here. What are you going to do? First of all, things like up 3 cents today. So nothing, right? You had this huge gap up, tried to fill the gap, couldn't, bounced off the 50 SMA. Technically, yes, it's bullish. But what am I looking at is this all-time high resistance right here, right? So I'm looking at this right there. It tried to get through today. It could not, bounced, dropped, and I have no movement on it. So I'm seeing nothing on this that would be worth the risk. Now, what I would do is this thing high today of 131.41. So there's your all-time high, 131.41. I would just take an alert and put it here, give it some space. So 132, the thing breaks 132. It's not an all-time high, sorry, but you know, a high of the last, I don't know, 2 years or so. I would just put a 132 price alert on it. If it breaks that, then I would consider going long. If not, I would not go near the damn thing. You know, it's easy to be tempted by a lot of these stocks, particularly when they're at their all-time high or something, but you need a reason to trade it. There needs to be a good verifiable reason. Let's see here. Next. Do you think your trading has changed for you over the last few years, better or worse? We certainly hope the hell it's not worse. I mean, Jesus. Yeah, I mean, I used to day trade 17, 18 positions a day. One, because the market called for it. The market was a hell of a lot more volatile. This was during a time where, hell, you could play futures overnight and get a huge 20, 30 point move. Those days are gone, particularly with interest rates where they are now. So that's changed. I mean, look, I prefer to take stock when I can and not options. You need a larger account to do that. Options, I get it. It's going to give you leverage. You know, I'm doing still the 12,500 challenge. I'll finish this challenge. It'll get to 25,000, not a problem. It just takes around 6 months to do it, right? Everyone wanted a challenge that's going to be realistic and not, you know, trying to do it within a week or so. So yeah, you want to double your account, it's probably going to take about 6 months to do it right. You're going to have ups and downs. The account now is at like, you know, $17,000, somewhere around there. So it's actually outperformed the S&P 500 by 2 times right now. It takes time. So my trading also has expanded into a mix of some fundamentals with technicals as well, and a little bit more long-term trades. I mean, some of you've seen some of the Melly trades, Moderna trades, things like that. Those are more long-term trades based not just on the technicals, but also on the financials of the company. We're getting a decent drop here on SPY, decent engulfing red candle. And let's see if we approach VWAP on that. All right, going back and forth. Hey, Harry, what's your net worth and how much of that was through trading? How much is my net worth? That's funny. Not gonna tell you what my net worth is. You see my trades, they're all public. You see how much I make and don't make. Obviously, I made money in various careers, and now I'm making money trading. If I wasn't a profitable trader, you should tell me to fuck off. And if I wasn't proving to you I'm a profitable trader, you should tell me to fuck off. That's all that should matter. My net worth, generally, here's a rule. My net worth is going to be more than the person who asked me what my net worth is. Usually someone who has a higher net worth than me isn't going to ask me what my net worth is. They're just going to know. All right. I am still in Nvidia puts from the strangle, right? Yes, I am. I'm actually in profit on that strangle. I took profit on the calls, and now I am doing well on the puts. Nvidia drops down a couple more dollars today, and I will take profit on those as well. I really kind of want to get out of the Nvidia strangle that I put on for myself before MU reports tonight. So I'm looking to exit that by end of day. You don't like Christmas songs. I don't want to know you. Okay. Marvel call bear swing trade better? No, just stay away from Marvel. Honestly, right now, the damn thing has no direction. It's just like a lost stock wandering out there on the road, turning tricks on the corner for dimes. It's just not good position. It's going to have track lines in its arm soon. I wouldn't go near the thing. It's toxic. And it'll keep telling you it'll change, but they never change. Marvel won't change. Marvel's still going to be fucked up. I mean, look at this thing. It's just hanging in the middle of nowhere. Every other damn chip stock has blown away the field. And where's Marvel? Just sitting here doing nothing. 67. Hey, you know what? If you invested in Marvel way back in 2021 at right here, guess how much you would have made? Nothing. Nothing. From September 2021 to today, Marvel hasn't fucking moved. Yeah, don't touch the thing. It teased us up here, but until it breaks out of any of these SMAs, Marvel is useless. How is Tesla looking to me? Tesla's looking to me like its CEO is a fucking nutbag. But if I were to look just at the chart, yes, I know Christmas songs are annoying and repetitive. That's why I don't sing them during Christmas. Of course, it makes perfect sense. Tesla. Well, here's Tesla. Well, general, I don't like shit that's between SMAs. And that's where Tesla is right now. Look at it. I do not like stocks that are between SMAs. Technically, is Tesla right now in the gap? Yeah. Here's the gap, right? Bump. But it's done this before. Down. Try it again. Down. Trying again. I don't trust it. When will I trust Tesla? Break the SMA 200. Right there. 207. It breaks that. I have an alert on. It breaks through here. Then I can think about getting bullish. Until then, I can draw all these lines that I want. Okay, there's some resistance right here at today's high of the day, right? Great. If it breaks through that, so what? It's got resistance here at the 200 SMA. I certainly wouldn't short it today, obviously, and I wouldn't go long. So if it breaks through, I'll be happy to go long. If it doesn't, I am not going to touch it unless it breaks below it. So, okay, he's from the IRS. Be careful. Yeah. Well, the IRS can love the IRS. Just gotta love them. That's why I have trader status with the IRS, and even then, still just love them. Just from past experience, how many bullish put spreads do you exit before expiry? I know this depends on the market context. Asking is exiting most of his positions into cash. If I have a market that's more dependable, I like to wait until expiry because it's a statistical thing, right? The reason it's a statistical thing is this. In a bullish put spread, you're getting, it's an out of the money bullish put spread. You have 2 layers of support over your short strike, and you're getting 20 cents on the dollar credit, which means you're risking 80 cents to the dollar. It's a 4 to 1, right? With that type of 25% return, you're going to need to be profitable more than 80 some odd percent of the time. And that means full profit. The earlier you take profit on bullish put spread, the higher your win rate has to be. So if I'm only taking profit at 50%, right, because my risk is so much higher, then my win rate on a trade like that needs to be like 90, 95%. If over time. So I tend to like to hold it until expiration. The only times I don't hold it until expiration is when I feel the market has a chance. I mean, the market always has a black swan chance of fucking right, and you see that once every couple of years, but has a chance of taking that 2% dip, and that'll happen once every 6 months or so. So do I feel we're at a heightened chance? Is the clock closer to midnight towards a 2% dip? Yeah, I do. And in that case, no layers of support is going to withstand that much of a market drag down in your stock. Why? Because chances are, if you're doing a bullish put spread, you're doing it in a stock like Apple, Amazon, Nvidia, any of these type of stocks. And these stocks are all in those ETFs. When the market drops, I don't care how strong the stock is, the ETF is going to drag down that stock. And that will break through your support levels. And that's why I got out of, for example, the Amazon bullish put spread, even though I could have probably taken a little bit more profit here. Can you comment on your process for longer term holdings for times when there's a low probability day trade? Yeah, and in points like this, I'm pretty much all cash, right? But if I get, let's say I get here a huge market drop, 2%, right? So what is a 2% market drop? You're looking at a drop to maybe 535, 530 on spot. The first thing I want to do is say, all right, what stocks withheld? What stocks, dropped but didn't drop proportionally as much as SPY did? I'm going to look at this company. I'm going to be looking at Nvidia. I'll be looking at Amazon. I'll be looking at Apple. I'll be looking at all the SMCI, Melly. I'll be looking at those stocks, and my thinking there will be, is this the time to back up the truck and load up with long-term calls or shares, and then just sit there with them and take that $100, $50 a share profit later on? So when I see those huge dips in the market, the buy the dip mentality, what I'm looking for is what stocks are best primed for me to do that. What's happening with Nvidia today? It's going down. I'm glad I could provide that insight for you. ISRG. Someone asked about ISRG. That is a really nice looking stock, isn't it? And if I look over on Option Stalker, I see it on all of the bullish scans too. Now look at this thing. Okay. Why do I like ISRG? And that would have been Luca. Thank you, Luca, for pointing it out. Why do I like ISRG? Because, go to the daily on it, look at this steady, nice incline here. Orderly, not parabolic, right? You can draw your trend line here like this, giving you every day a nice point of where the stock will face some resistance. Here today, you're looking around 440, 650. Also, on top of that, you can see this is not that extended. Look at the slope here of this line. Look at the slope of the 15 EMA. You're not that extended. Sometimes when you get something like this, right, you'll get a slope that goes, up here like that. And you have so now you have a huge extension. But that's not the case here. The case here is you have a nice orderly incline. I like this stock. I like also that it's probably, if you get a drop in the market, like look right now, ISRG going up. What has the market been doing in the same period of time? Dropping. So you got the market dropping and ISRG today not impacted at all. Yeah, the volume averaging 1.3 million shares, so not great volume on this thing. What does that mean? That means that, a lottery winner in Ohio can come in and buy a bunch of shares of this and probably or sell a bunch of and throw it out of whack. But overall, it's a really good pick. It's a good play. How would I play ISRG? If you're not going to buy the stock, it does have weekly options, but they are expensive. So, the best you could probably, and they have a wide bid-ask spread. In that case, you do call debit spread, and you do, let's say, the 440, 445. You can't get that for more than 50%. No call debit spread here for this week. Next week, best you can do here is you get the 435 calls, you put them in for $11 and wait to see if they click. That's what I would be looking for. All right, let's see. I think I look a little nervous. I should go on a little vacation to Vegas. Okay, I'm never going to turn down Vegas. Vegas is fun. All right. Okay. Can we hear more of your thoughts on why Elon is a nutbag? If you really have to question why I think Elon's a nutbag, I'm not going to convince you otherwise. I'm not going to, no. But really? Really? You don't think he's a, okay. All right, but all right. Seg short. Let's see. No. I hope that answers your question. No seg short. Constellation Energy, do not short it. Why? Look at the daily chart. Support here, support here, support. Do not short something that is coming up to support. No. So answer no. That would be no. How does crowd look to you as a long now that it's over the SMAs? How does crowd look to me? It looks like it's down $5 today. That's what it looks like. Why? Go long Apple. Go long Amazon. Why look at something that is down? The market is basically flat today, and this thing is down $5, and you're asking, is it a long? The reason you're asking that is because you're thinking maybe it's still a good long, but I can just get it at a better price today than I can get tomorrow, so I should go long crowd. Well, what if you get tomorrow and there's a reason why this stock is dropping today into a flat market? It could continue to drop. Look at all this space this stock has to go down. You're telling me that a bid check down here, at least into the gap of 366 right here. Look at this gap. It's right there. You're telling me that a bid check here is inconceivable? I don't know if you think that word means what you think it means. Right here. Look at that. That is probably where it is headed, right there. Now, if it hits this line, bounces off of it, gets above the 15 EMA, you'll get the stock probably at around 375 and then go long. Wait for this thing to come down, test the bid on the gap, bounce up, and then go long on it. Why in the hell would you go long now? That doesn't make any sense. I know Elon's crack just wanted you to go on a rant. Funny. You want me to go on a rant? Yeah, well, here's a rant for you. Half the people out there have an IQ below 100, right? And used to be, they were okay with that. Maybe not okay with it, but people who aren't too bright accepted the fact that, all right, I'm never gonna. But somewhere along the way, they started thinking, as much as it's possible for them to think, that, well, wait a minute, what if, what if I'm really not stupid? What if all the people that are smart are stupid and I am really smart? Hmm. Well, that's a pretty appealing thought if you're a fucking idiot, isn't it? If you're an idiot, the the best thing you could think is that you're not an idiot, because they might have accepted it before, but there's nobody who's an idiot that wants to be an idiot. I mean, you're kind of born an idiot. I mean, yeah, and idiots are kind of made at times, and you can take an idiot and make them a little bit less of an idiot by better upbringing, whatever. But generally, if you're an idiot, you're an idiot, and nobody wants to be an idiot. But now people who are idiots think that maybe, just maybe, they're not the idiots. Maybe the smart ones are. And so that's where you start getting this idea of that you can believe anything. Now, I don't care what side I don't give a shit. I am the type of person who, if someone posts something or someone puts something there, I will go and, like, if someone comments on a law, I will read the friggin' law, the actual law that's being passed, not what an article says about the law, not what someone commenting on it says about it. I will actually read the text, the 400 fucking page law itself. And when I do that, I find out that most people have no clue what they're talking about. I will go back and look up every single thing. I will then I will look at the opinions on one side. I will look at the opinions on the other side, and I will come to a conclusion with as much information as possible, weighting the expertise in the subject from somebody. Compare that to someone who gets the primary amount of information from a meme. Now, how does that apply to trading, right? Well, good question, considering this is a trading stream, right? It's simple. If you are going to believe every news pop, every thing, every tweet, whatever someone says about a stock or a company or whatever, without digging further into it, you're going to be very susceptible to sell the news events. You're going to be very susceptible to, oh, that looks like it should pop. That looks like that should happen. And guiding your trading on something other than price action, because price action should be what guides your trading. That tells you what people are thinking. All right. Now, rant there over, and back to our regularly scheduled questions. What are my thoughts on AI generating algos and removing some of the human element? Okay. First, no, I don't think you need a high IQ to be successful in trading, because it's a learned skill. As long as you put dedication, I remember in graduate school, there was this someone who was getting their PhD in the cohort with me, and this person was about as fucking stupid as you can imagine. I mean, seriously, like, I've met fishing bait that's smarter. They got their PhD. The reason they got their PhD is because they were also the hardest worker I've probably met since then. This person, who was probably 20 years older than me at the time, they worked day and night, non-stop. And they just studied, and it might have taken them 10 times longer to get a concept than it would anyone else. But then they stayed there 10 times longer than anyone else, so they got it. So they made up for the fact that they weren't too bright with putting in all the work. Trading is like going to law school. It's like going to college. It's like, I've been to graduate school. I know what it takes to do that. I'm telling you, the work you have to put in to learn how to trade, the 2 years minimum you have to put in, is equal. At the least, it's equal. So yeah, I mean, you don't need to have a brilliant IQ to be a great trader. It might speed up your process, but you just need to put in the time. That's all. All right, so where was I going? I was going somewhere with this. And what is my Twitter handle? It's Real Day Trading. You should know that. Okay. I don't even know where the hell I was talking about. But personal question, why do you continue to trade? I've seen your success, and many would say you're already worth a considerable amount. Is trading in itself just a passion? It's a good question. I don't know. I do something until I'm bored. That's it. Then I do the next thing. I've been a professor. I've been the CEO of companies. I've helped run a movie studio, marketing movie studio. I've helped, produce movies. I've done everything up and down the gambit, and I do it until I get bored or until I feel like I've contributed all I can contribute. Yes, I hate people. I can't stand them. I just don't. And I probably, if I met most of you, I would not like you, right? Not maybe because of anything about you, but because you're people. And I just don't like fucking people. But what I really hate is watching people who have their hard-earned money. Most of you out there, you have your money, you worked 9 to 5, you did whatever you did. I'm not saying you're all like a commercial for working in a factory and having a beer at the bar. You sat in a cubicle, you did whatever, you earned your money, and now you're looking for a better life. And trading offers that, right? There's no doubt trading tantalizes or teases you with that you could have a better life trading. You could have financial independence. All you need is some money to put in there, and it's never been easier. You put money into a broker anywhere you have an internet connection. And it's true, if you can get it right and you can learn how to do it, you can make money anywhere. I can go on vacation tomorrow. I can go anywhere as long as I have a laptop. I can turn it on and make money, right? And what I hate to see is the people who get screwed over in trading aren't the institutions, aren't the people with a lot of money. It's the people who have $5,000, $10,000, and are hoping to take that money and turn it into something where they can one day stop working and retire early and just live off the earnings of trading and be in control of their own destiny. But they can't, because they are besieged by people who are scamming them, by YouTube fucktards out there who are telling them, hey, give me $900 and I'll teach you this 3-bar method, and fuck off. These people are stealing your money. They have no bar, no standard. They charge you to teach you crap. That's why I just don't charge. I don't want your money. I don't need your money. I'll take the money of some institution in Nvidia right now, but I don't want to take your money. I don't need your money. No offense, I don't. I'd rather people who are just trying to make a better life for themselves not be scammed. So right now, that's my passion for doing this, and which kind of contradicts the hating people part. But what I really hate is people who take advantage of people. And I hate, inherent unfairness. And there is an unfairness built in. This thing is not equipped. The game is not equipped. And I'm not saying it's rigged against you. It's not rigged against you. It's just not rigged for you. And the information that's there to help you is certainly not available. It's just not available to people. And so people go on, and what made me really start doing this is when I was just posting on Reddit or whatever, and I started getting these messages from people who lost everything. They lost their house, they lost their marriage, they lost their family. Why? Because they read some fucking post from someone who told them diamond hands, dude, and it just screwed them. And they're taking advice. It's like your study partner got the F in the class and they're telling you how to pass. They don't know how to pass themselves. They're failing. Unless someone can show you that they is not, who's it rigged for? It's rigged for institutions. It's rigged for people with access to more information. The information you have access to, but you don't have access to. There's a fine line there. And so, when you are there and you're desperate and you're just trying to get ahead, you will take anybody who seems like they know what they're talking about. But unless that person can prove to you that they are making money, and when I say prove, I don't mean a Photoshop P&L. I don't mean any of that crap. Post your trade. Post your position size, post the exact cost, and then post your exit. You cannot fake that. Either it was right or it was wrong. Period. Period. And when I say it's not rigged against you, it's not rigged against you because they don't give a shit about you. They don't care. Retail traders do not impact the market unless it's on one or two stocks where they can do a combined effort. Otherwise, it's like herding cats. They just don't give a shit about you. They're not doing things, oh, let's screw over retail Joe or Jane. They don't give a fuck. They don't care if you make money or not make money. Just like a casino. A casino doesn't care if you win $50,000 or you lost 100. They know overall you're not going to make money. Why? Because you're going to do stupid shit. And they don't care either way. That's not their fault, their problem. That is your fault for not selling when GME is at $200 a share or whatever. That's not their doing. They didn't do that. You know who made billions of dollars? Hedge funds made money. All the people, damn the man, screw the man. They're the ones who made money. And that is the absolute truth of it. Why is it? Because you don't have the reports and the information and the know-how, and no one is there telling you this is how you should trade. Because if you trade correctly, you will find it is not rigged. It is not rigged. The trades that I'm making, the profit I just took on Amazon today, the overall profit I have for a year, there's nothing rigged about that. I didn't have special information. I'm looking at the price action. I'm looking at the technicals. I'm not looking at some inside information that no one else has any access to. It has that jive with Jim Cramer shouting, buy Netflix before it crashes, and many others telling you to keep your money in Bear Stearns. It jives with, why the fuck are you listening to them? Why? Because you know what? They're just as stupid and as wrong as you are. They just have a better platform. Right? They have a better overall platform. And as long as they get ratings, nobody gives a shit how right they are or wrong they are. You choose what you're listening to and not listening to. The correct information is out there, but doing your own research or watching CNBC or reading an article, that's not getting the information. Putting in hours and hours and hours of work, that's getting the information. Reading report after report after report, studying charts, putting alerts, watching every second, all of it, treating this like the job it has to be. That is information. Watching Jim Cramer, who tells you to buy Netflix and then it crashes, that is not his fault. He was wrong. It's your fault for fucking following it. I assume he must know more than me. He has a show. Trust me, I've been in show business. Just because they have a show doesn't mean they know more than you. It just means they are better in front of a camera than you. It means they can pull in higher ratings than you can, and that's why they're doing it and you're not doing it. They don't give a shit whether he's right or wrong. You would think it's a meritocracy, right? You would think, well, he wouldn't still be on air if he was wrong all the time. No, actually, it doesn't fucking matter. It doesn't matter whether he's right or wrong. All that matters is whether people watch him. That's it. And people do. And that's why he's still on air. That's all. Anyway, sorry. I said I'd go off a rail and kind of did. So there you go. For those people who tuned in to watch me go off a rail, you got what you wanted. All right. Okay. Geez, there's a lot of questions here. And I don't even know where to start. Oh, wait, I started this whole thing on AI generating algos and removing some of the more human element. I don't think we're near there yet. I don't, sorry. I was in a position in the industry where I came up with a method of called script assessment, right? And it was based on years and years and years of information, of audience response and information. But there's a fine line there because I never believed you can algorithm art, right? What you could do is you could predict what and how an audience is going to respond. You could say the audience is not going to like this ending. Why? Because in 20 other films that are very similar to this one and this archetype and this and this and this, the similar type of ending resulted in audience objection. They like this instead. So then you go to the writer and say, look, either you can change it or some head of production is going to change it. But either way, if this movie is going to get made and be successful, that ending's going to change. Algorithm art is sort of like you just put the script through a computer and it pumps back at you and says, this is what you need to do. And it's not worked. It's the same problem with trading where you can back test and go ahead, back test a 3-8 cross, right? And you'll see, oh my God, this thing has like a 90% success rate. Now try to trade it. Not going to have a 90% success rate. One, because a computer is going to do, it's just going to automatically do it every time they cross, and you're not going to be able to do that live. But the problem is the success rate. You can be 90% successful on that, and the 10% where it's off. You still have to put in your stops on those algorithms, and it's an iterative process. Trading is very much a mental game of looking at the entire situation. So right now, Amazon breaking through an all-time high while the market is flat, heading up 193.40 right now. It's a great long. But taking all of that into account, when the market is flat, stock going through an all-time high. How long has that all-time high been there? 3.5 years, 3.5 years of resistance. That amount of resistance matters, right? Not 2 years, not 1 year. There's so many variables that go in there. The AI component of a successful trading algorithm isn't there yet. Even institutions do not base a majority of their trading on those algorithms, and they have a better chance because they're trading in a larger scale than you are, in which case those algorithms actually at a longer term hold period. But I would not recommend it for yourself, and it's also not going to help you learn. So let's see. Has my personality changed as you developed as a trader? So even your rants are educational. I'm glad. Dave's Chat with Trader podcast happening. I will ask about that. Has my personality changed as I developed as a trader? No, I've always been the misanthropic motherfucker that I am. Really. I mean, I haven't changed. I probably, no, I was going to say I have less bad habits, but no, I don't. I have a lot of bad habits too. So there's that. Do I play golf? Hit the ball, chase the ball, find the ball, hit the ball again? I'd rather freaking shoot myself in the head and drink bleach. Dell looks relatively weak and is currently below all but the 200 MA with about $13 before support. Let's take a look at Dell, shall we? Just barely below the 50 SMA. Just barely. And look at this here. See this here? Take this. Mr. Sandman. Give me a dream. Right there. So it's broken through 2 layers of support. I'd say if Dell is below this line on close, it's a good short while keeping in mind that MU earnings might impact it. So there you have your thing. You want to take a little bit more risk. You'll probably pay a little bit more in premiums because of MU earnings bleeding over into Dell. I know that we have a tremendous number of questions here, but we have kind of gone a little bit over time. Next time I will do a little bit more than this. We'll try to get back to some of your questions. And yes, I am writing a post in the wiki, the wiki 2.0 on how institutions think. And the idea behind that would be to contrast that with how retail traders think, which I think is very educational for people to realize that it's institutions that move the market. But if you're trying to apply a retail mindset to what's going to happen with a stock, there's going to be a differential there because institutions aren't thinking about it the same way you are. So the best thing to do is get into their heads, figure out how they're thinking about it, and then you can act accordingly. Okay, everyone, I hope this was helpful, enjoyable, whatever you want to call it. And I will see you all next week.